So your client walks in with an 800 credit score, perfect payment history, zero debt, and guess what? They just got denied for their dream home. Shocking, right? Here's what most agents don't understand. Credit scores are only one piece of a much bigger puzzle. Today, I'm pulling back the curtain on why even your most credit-worthy clients can face rejection, and more importantly, how you can help them navigate the maze of home buying. I'm here to share insider information most loan officers won't tell you or just simply don't know. Why? Because many don't fully understand it themselves. Over my years in mortgage lending, I've seen this play out countless times. Agents bring me clients thinking it's a slam dunk, and there's no way these clients don't qualify because they've got perfect credit score or high income. But then out of nowhere, hidden landmines appear and the deal falls apart. We'll explore 5 critical factors beyond credit scores that can make or break a loan approval. You'll learn how to spot red flags before your clients do, and I'll give you the exact questions to ask so you position yourself as a professional your client needs. Now, if you've ever had a client shocked by a denial, drop a comment below. You're not alone. Factor number 1 is debt to income ratios. Picture this, your client has never missed a payment and they have a great credit score, but they've been juggling student loans, a few car payments, and maybe even some credit cards. Lenders look at your total monthly debt, including your new mortgage. Lenders look at your total monthly debt, including the new mortgage, and they compare that to your gross monthly income. If that ratio is too high, the approval gets tough. Even a $300 car payment can push a client right over the edge. And here's the main thing, debt to income thresholds, they'll vary for every different situation. Conventional loans may be stricter than FHA, VA, or USDA, and some lenders even add overlays, making their limits even tighter. The bottom line, perfect credit doesn't erase these obligations. An 800 credit score can still look overextended on paper. Smart agents know the lender they're working with and understand these thresholds so their buyer or their buyer on the listing doesn't get a surprise. Not just their credit history. That way you spot DTI issues before your client falls in love with a home that they actually can't afford. Factor number 2 is your employment stability. Say your client took 3 months off to travel or care for family. It makes sense in real life, but underwriting may see this as instability. Lenders don't just check income today, they want predictability. 5 years in the same job looks safe. 3 jobs in the last 2 years, even with raises, might look a little bit more risky. Self-employed clients, that's another challenge. Great personal credit doesn't guarantee your approval because lenders are gonna dig into tax returns and understand your year-over-year income and the consistency of your business. And here's a curveball. Promotions and job changes, even good ones, can cause delays. That new dream job that you just got, the lender may want extra proof that it's stable. Smart lenders ask, how long have you been in a role? Any gaps that you've had? Any changes to your pay structure? They want to know the employment story, and you'll know how to set expectations. Factor number 3 is recent credit activity. Here's a classic trap that you're most likely familiar with. Your client finances new furniture, opens a store card, leases a car right before applying or during the loan process. They think, no problem, my score is 800, but underwriting is going to think differently. Recent inquiries, they'll raise red flags. New accounts create instability. Timing matters. A new account may not hurt the score right away, but it does show up in underwriting. And some systems will auto flag too many inquiries. Even good moves like raising limits or balance transfers can still look risky to the credit bureaus and lower your credit score. In the smart play, once clients are serious about buying, freeze their credit behavior. No new cards, no cars, no big financing. Even a perfect credit score can't protect them, so the best approach is to live a boring lifestyle when you're planning to buy a house. Factors 4 and 5 are property restrictions and lender overlays. Picture this. Perfect credit, client falls in love with a condo, a manufactured home, or even a unique rural property. Financially, they're all set, but the lender says no, and here's why. Not all lenders are the same, and they don't follow the same rules. Some add what are called overlays, which are stricter rules than just the minimum. One lender may approve condos freely, while another demands HOA budgets, reserves, and limits on rentals. Rural or unique properties, approved by one lender, denied by the next. We had a scenario just last fall that fits in this scenario to a T. They were more than qualified clients, very high income, nearly $1 million in the bank, but they couldn't get their loan to go through. And why? They were buying an A-frame home that was unique in that area. With experience on this situation though, we were able to help this client find a bank willing to do the loan, and 2 weeks later, they now have their second home on the lake. This is why the right loan officer is going to matter. The deal isn't dead, your client just needs the right lender fit. Smart agents partner with pros who know how lenders match specific properties with the right place. That saves the client from unnecessary denials and delays. The solution isn't avoiding complex clients, it's partnering with loan officers who see the whole picture, who pre-qualify properly, who flag issues early, who match clients to the right lenders. With the right partnership, you avoid surprises, set expectations, and deliver smooth closings every time. Perfect credit clients deserve success, but it takes the right team, and when you bring that to the table, you become invaluable. If this opened your eyes to hidden approval pitfalls, what's the most surprising denial that you've seen as an agent? Or if you're a home buyer yourself, what are the nightmares you've run into in the past? And if you know agents who'd benefit, share this video. We're stronger together when we understand how the system really works. Thanks for watching. I'll see you next week with more secrets about how getting a mortgage really works.